We are very fortunate to have with us today Julie Bates. Julie is the Associate State Director for the Central Valley region of AARP. But specifically, what she's going to be talking to us about today are reverse mortgages. How many of you have heard of reverse mortgages? So you're familiar with them? I think that the message is today that it can be a wonderful thing, but it can also be very dangerous. And I think she's going to share with us both, the good things about reverse mortgages, but also what to watch out for so you don't get taken. So we're very fortunate to have you here. Thank you. The podium is yours. Let's welcome her.
I was going to stand here behind the wonderful wine barrel, but I just can't contain myself. So I'm going to have to figure out how to use the clicker that will move the slides, hold on to this, and talk to you all at the same time. So if I fumble something, I hope you won't laugh too hard.
Don't ever chew gum.
I don't think I could do it. I don't think I could chew gum and do all this at the same time. One of the things I want to tell you before we get started, most of you raised your hands about you've heard about reverse mortgages, and I bet almost all of you would raise your hands and say, I heard about them and it scared me to death and I don't know what to do. Hopefully by the time we're done today, you're going to feel a little more knowledgeable about reverse mortgages, and if you don't, if I confuse you more, you've received this wonderful bit of material. This is going to give you anything and everything you could ever possibly want to know about reverse mortgages. It gives you the questions to ask. It gives you the things to think about. It tells you everything in almost minute detail about how to have a reverse mortgage, why you might want to, why you might not want to, and what to look out for in the possibilities of predatory lending. The other thing you received today is something that is important to me, and I hope will be important to you. You received this card. Did everybody get one of those? And it's about the AARP Divide and Fail campaign. It's all about comprehensive health coverage and financial security for all Californians and the country. And if it's something that seems important, or can you hear me? He wants me to stand behind the barrel so he can take my picture.
No, it's because the microphone for that is there. The second microphone is for his TV thing.
So I have to stand here, huh?
You know what you do? And
okay.
Here's the deal. This is for him, and if you're not here, then the TV people don't get you.
Okay. I'll stand here. It will be hard, but I will. I think better when I move.
Pick up the barrel here.
Is it on wheels? That would be great. All right. But if you would take a look at this, if it's something that you would be interested in supporting, I do ask you to fill it out, sign your name, pass it to the right, and pass it to the right? Yeah, pass it to the right, and I'll pick them up on the way out. So I appreciate that. And I also need to thank Kathy for inviting me to be here today. I did a presentation on reverse mortgages in Modesto like 2 years ago. And she called me up and said, you need to come to my conference. I said, I would love to come to your conference. And I said, when is it? And she said, tomorrow. And I said, I can't come. But she called me back and asked me to come today. So I appreciate the opportunity to be with you. It's important to point out a couple of things about AARP and the AARP Foundation. First and foremost, you need to know that AARP does not endorse any reverse mortgage. I am not here to tell you about reverse mortgages to sell you one. I am here to educate you about reverse mortgages so you can make an informed decision. Knowledge is power. And oftentimes we go into this thing called reverse mortgages, or shoot, even first mortgages, and we don't know a thing about it. And we just start signing our name because we trust the person who has put the mortgage in front of us. So this really is all about knowledge and education. But AARP started talking about reverse mortgages way back in 1986 when we opened the Home Equity Information Center. Okay, and then we also started providing counseling across the country with the Housing and Urban Development Organization in 1989. And you might be saying, counseling, why do I need counseling? When we get to the point of having a reverse mortgage, as I mentioned to one of my first row fans here that I got to talk about before we started, oftentimes we build our home as our heritage or our legacy to our children. And it's really important to talk to someone, to get counseling, to think about all of the ramifications of what it would mean to have a reverse mortgage before you sign on the dotted line. There's a lot of emotional issues that go into this as well. And as I mentioned, we don't endorse any reverse mortgages, nor do we sell them. Okay. And the question that many of you have asked of me already today, well, reverse mortgages, is it a good thing or is it a bad thing? And the answer is yes. It depends, okay? Reverse mortgages can be a fabulous thing. 80% of older homeowners, headed by someone 62 years of age or older, own the home that they live in. Now here it's Calaveras County, right? I'm in the right county, Calaveras County, or even in San Jose, Santa Clara County, where my parents lived. When they bought their house 40 plus years ago, they bought it for $15,000. How many of you here bought a house for about that price? Okay. Now, that same house, the same funny little house that my parents called the starter house that they've been in so many years later, is worth well over $800,000. Okay? Now the equity increase may not be quite so much here, but if you spent that $15,000 and it's now worth $300,000 and you're on a very, very limited income, taking out a reverse mortgage may help you enjoy life instead of just enduring life. You know, and of those houses, 72% of them don't have a mortgage of any kind. They own their house free and clear. They're paying their taxes, they're paying their insurance, but that's all they're paying on their home. There is $2 trillion, not million, not billion, but trillion with a T, dollars locked up in equity among our elders 62 years of age and older. 58% of older owners meet the HUD definition of low income. Now, from what I can tell of this group, there are some of you that work in social services, and then there are some of you who volunteer, and some of you are here just for information. But when we look at that number, 58% of older homeowners meet the HUD definition of low income. They get a Social Security check, they get maybe a little more money coming in, but they're surviving on a very small amount of money. And then they have this house that's worth $300,000, and they might be able to get on a little bit better. And then, of course, the one that I like the most is 84% of those homeowners want to stay at home. I don't know about you, but I don't want to leave my home. You know, when I bought my home, I looked at it because I've worked in long-term care, I've worked in the field of aging for more than 20 years. I looked at it as a way of, can I stay here? Can I stay in this place until the very end? And I can. There'll come a time when I probably won't be able to go down the basement steps, but there's nothing down there that I desperately need. So I'll be okay in my home, and I want to make sure that I can stay there as long as possible. Okay. Reverse mortgages, is important to know what exactly they are. What by definition is a reverse mortgage? You know, I mentioned here at the front that a reverse mortgage is very much like a forward mortgage. You know, when we buy our house, we take out a loan, we pay a monthly payment to the bank, and in time we own our home. Reverse mortgage works very much the same way, but the bank is paying you a monthly amount until you get to the end of your loan amount. It is a loan against the equity of your home. And that's important to think about, because as I mentioned, oftentimes, we look at the homestead, the family homestead. This is where I raised my children. This is where, you know, we had the first dog, and we had the second dog, and we had family gatherings and 13th birthdays, and we did all these wonderful things in the home. And we like to think about leaving that home as our inheritance to our children. So if we take an equity at a home, that rain really messed me up. I have to say, Elizabeth was amazing to be able to stand out here and not just stare out the window and watch the thundering rain fall down. So I'm grateful that it stopped because I would be transfixed looking out the window at that water that came down. But we have to remember, if we take all the equity out of our homes, when the time comes that we move out of our home or we pass on or we leave the home completely, our heirs will either have to pay the bank what we took out, or the bank will take our home for our debt. That's part of what a reverse mortgage is. It provides cash advances to the borrower. One of the unique things about it is when you have a reverse mortgage, you don't make any payments. You don't have to write a check to the bank every month. The bank is writing you a check. All of the payments come at the end. It's, again, the surviving borrower moves out of the home or dies or permanently leaves. That's when the payments begin. Generally, larger amounts are available to older people in the highest valued home. That comes out a little strange. But let's say you are a husband and wife living in this house in Calaveras County that you bought for $15,000. It's now worth $350,000. And you're 85 years old and 87 years old. The amount of money that you're going to be able to take out of the house is greater than if you are 65 and 68 years old. And we'll talk about that a little later. The other thing to remember, it is rising debt and falling equity. We've talked about that in a couple of different ways, but it is rising debt. The debt has to be paid at the end. You're not going to write the check, but your equity goes down and the debt goes up. The reverse of when you bought your house and you originally had the note for $15,000 and every month you paid your mortgage payment and the debt went down and the equity went up, same principle. It's harder to do that standing here than walking around, and that's okay. There are several different kinds of home reverse mortgages. There are property tax deferral relief loans. There are deferred payment loans for home repairs and improvements. There are sale leaseback transactions, and there are remainder interest plans. And we're not going to talk a lot about those. If that's something that you're really interested in, look at the book. Not now. You may not look at the book now, only later. The three main types of reverse mortgages are single-purpose home repair property tax loans. Now in California, even though whether you love it or hate it, we have something called Proposition 13. Do you remember that back in the 70s when we passed Proposition 13? We don't have quite as large of issue regarding increasing property taxes because, of course, if you've stayed in that home all that time, those 40-plus years, you're paying property tax based on the assessed value in 1976. I think that's when we passed Proposition 13. But in other states, property taxes go up every single year. And it can be a major, major burden to the elderly homeowner. And so there are loans that are just for that, just to pay the property taxes, do the home repair in order to secure the insurance, those kinds of things. They tend to be given out by nonprofit organizations or local governments. They are income-based and limited use, okay? We don't have too many of those going on here in California. The biggest ones you're going to hear about are federally insured by HUD, and you have a home equity conversion mortgage, and you can use them for any purpose. If you decide to do a reverse mortgage that is issued by HUD and it's a home equity conversion mortgage, you can use it to take a trip to the Bahamas if you want to. You could also use it to have in-home care, to be able to have, you know, that daily assistance or something of that nature in your home, and everything in between, okay? They are the largest amounts of money available at the lowest cost for the most conservative home values. And that's important to look at. Just like when you buy a new home, those of us who might be looking at homes now, HUD has a lower maximum that they are willing to lend. And I think here in California, I think the maximum, they just raised it, the maximum loan is like $500,000, which doesn't get you much in Los Angeles County. okay? And the same goes for reverse mortgages. They aren't going to give you 100% of the equity in your home in a reverse mortgage. It's going to be a lot more conservative than some of the loans that might be available from a bank or from a finance institution. Even though you are not going to pay for the origination fees and the taxes that are put on it and the interest that's put on it until the end, it is not an inexpensive way to borrow money. So if you were looking for just, I don't know, $20,000 to get you through a crisis, a reverse mortgage isn't the way to do it. There are better ways to get money for that kind of expense than a reverse mortgage. Now, the thing to remember about reverse mortgages is the business is booming. If you had asked someone what a reverse mortgage was even 15 years ago, they would have looked at you like you were a crazy person. There wasn't even a product on the market in order to have a reverse mortgage. We are learning as we go sometimes about the pitfalls as well as the pros of reverse mortgages. Those home equity conversion mortgages that we just talked about equal 90 to 95% of all of the reverse mortgage market. One of the benefits of this emerging process is when people started issuing reverse mortgages, the interest rates were really high. And over the past several years, those interest rates have started coming down. It'll be interesting to see what happens as our economy and the housing market continues to change, because we are in a state of flux. So we could see another increase in the amount of interest, but not as much as we've seen in the past. There is increased awareness about reverse mortgages. We have days like this where we come and we talk about reverse mortgages to inform people. And up until about 6 months ago, we could say our property values are increasing exponentially, what seems like every day. We are now seeing those property values beginning to decline a little bit and stabilizing out. Again, the good thing is if you've been in that house a long time, that equity is not going to disappear. Okay, you're still going to have a lot of equity to pull from. There have been some problems with retirement plans and investment setbacks. One of the reasons you see people taking out reverse mortgages is they've retired from the workforce, maybe even 20 years from the workforce, and then all of a sudden, their former employer is scrapping their pension plans, and they're not getting their pension monies back. And we're seeing this happen in several industries. So people who thought they were set are having problems. And then the other thing you have to look at is a few years back, there was a big drop in the stock market. Did any of you invest in Enron? I did. See, I know I'm going to live to be 100 years old. I've always known I'm going to live to be 100 years old. I have 4-generation pictures where my great-grandmother, who died when I was in college at 100 years old, was the young person. So I have been fanatical about my retirement since I had a job, okay? My very first job, I started putting money away because I knew I was going to live a long time, and I wanted to make sure. I've worked in the field of aging forever, long-term care, acute care hospitals, home health agencies. I see what happens when there is no money. So I was very, very concerned about this. I wanted to be sure I had enough for my retirement. To say I took a major hit during that time is an understatement. Now the good thing is I still have at least 20 years to go. So I can build all that back up. But if that happened today, and it was my entire retirement income, I'd be in a world of hurt. And a reverse mortgage could help me through that time. To help you understand how very new this is, since their inception, there have only been 75,000 home equity conversion loans issued by HUD. You all are never going to have me back, and that's okay, in fiscal year 2006. But hopefully we'll get there from here. County equity limits increase annually, and that's important to know. Because if we live in a county, some of you may live, I understand that you have a 5-county area that's represented here. Some of you may live in a county, let's say like Alpine County, that has had a lower equity increase than some of the other counties. The good thing is they're looking at those county increases every year instead of setting them for multiple years, because people got in a lot of trouble with getting first loans as well as reverse mortgages because the tabulations didn't keep up with the actual market. And now they're looking at that annually, and we're getting a little better at that. Okay. Not everyone is okay. Yeah, not everyone's a vegetable, thanks be praised to God, and not everyone is eligible either. In order to qualify for this type of a loan, all borrowers need to be 62 years of age or more, okay? You can't be 40, you can't be 50, you have to be at least 62 years of age or more, and you must own and live in the residential property. And if you own or live in a 4-unit, like a little apartment complex that you bought, or a triplex or a duplex or something of that nature, you have to own it and you have to live there. If you have a larger complex of 5 or more, you can't do a reverse mortgage on that. Okay, so it's only intended for single-family homes and multiple housing units up to 4. Most condos qualify. Co-ops do not. So if you live in Greenwich Village in a co-op, you can't have a reverse mortgage, okay? But if you live in a condominium and you own it, you can. Your property must be in good condition. Now, we've talked about, some of those self-neglect issues and some of the issues of financing, and one of the first things to go is maintenance. You don't keep up fixing the fence because you're not able to either afford it or physically able to do it. And you don't keep up the paint on the outside of the house, and there may be some electrical issues. All those deferred maintenance things keep building up. And you must pay off any existing mortgages. If you took out a second mortgage to pay for the kids to go to college or the wedding or something to that nature, those things must be paid off. Now, the good thing is if you take out a reverse mortgage and you had that second mortgage for the wedding, okay, and you had the deferred maintenance, which was making it difficult for you to get insurance, you can use your reverse mortgage in order to cover those costs, okay? One of the most important things that has come about in regards to reverse mortgage is independent counseling. We talked about why would I need counseling. It's very, very important. And it must be provided by a public, nonprofit, HUD-approved agency. The reason it's important is you're getting a big chunk of money. Besides the emotional issues, there's something called a predatory lender. Have you all heard about predatory lenders today? Predatory lenders aren't nice people. They come across as nice people, but they're not nice people. And they want to take from you what you have. Okay? And when they say to you, oh yes, Mrs. Smith, I am happy to provide you a reverse mortgage. I'm going to give you $300,000, and you're going to get that check, and here's what I think you should do with it. I think you should invest it with my colleague, or my friend, or with me. And because you trust this person, you don't read the small print, and you realize that the first payout is in 2022, and you'll be 100 and however many years old. The only person who benefits is the person holding the reverse mortgage and the investments that you signed. So having independent counseling from a nonprofit organization that's HUD approved, they work with you through this process. They ask you the questions. They help you read that small print, and not only read it, but understand it. I've read an awful lot of contracts. I've looked at an awful lot of stuff. I even read my mortgage papers. I read them all. Did I understand them? Absolutely not. But I knew I had to read them, and I did. And if I had had this opportunity available to me, it would have been good. Now, did I get a good loan? Yes. But I could have gotten in trouble. I could have been in one of those situations that we're hearing about on the television today where, you're having exceedingly high interest after that teaser interest rate, or they're letting you take out a mortgage that you have no ability to repay. It's all in that small print, and so it's important to read it. Now let's talk about how much can we get. How much we can get depends on 3 main factors. And of course, one of them is the age of the youngest borrower. And you might be going, well, what does that matter? Well, kind of like insurance. You have to look at what the loan is going to do. The loan is going to provide you money for the entire time that you are residing in that home until you permanently move out, pass on, or sell your property. The bank is figuring if you're 85, the likelihood of you permanently moving out or passing on are greater to come sooner than if you're 62. And they have to ensure that they give you that monthly income throughout the life of the loan. So they're not going to give you all the money up front or bigger payments up front if you have a longer time to live. Does that make sense? Okay. Then another factor, does that make, Marion's laughing. She said, that doesn't make any sense at all. I know it doesn't make too much sense, but I'm glad you all shook your head. That was very helpful to me. And I appreciate your laugh as well. Another thing to look at as how much money you can get out is based on the interest rate. When our interest rates are 5%, 6%, as they have been in the last 10 years or so, we can have bigger money at less cost. As we're seeing the interest rates go up, and hopefully they won't go up as much as they did in the 90s, okay, more of our payments, more of the money gets eaten up in that interest rate and how we can expect to receive. And then, of course, the big one is the property value, okay? The property value says it all. And I talked about before about the lower amount of cost, even though my parents' house is amazingly high for that funny little house, the most that they can get out is $362,790. Okay? And how that will benefit the heirs, as we've talked about before, is that if the time comes, well, it's not if, when the time comes that my parents do move on, either to a retirement community, a nursing home, or pass on, my brother and I have a choice. We can decide to pay off that amount and still have a house that has a significant amount of equity for us to sell. We can sell the house and pay the bank and keep the remainder. There's lots of different things that could happen at the end of the loan. The best way to find out how much money you can receive from a reverse mortgage is to go to the HUD website. Go to AARP as well. HUD has one, but AARP has one. And you put in www.aarp.org/RevMort. RevMort, R-E-V-M-O-R-T. And that's going to give you all kinds of information about reverse mortgages, and it's going to let you see what you can expect. And that's important, because if you have someone standing on your doorstep, you know, we heard about the contractors coming and standing on your doorstep. I hate to tell you this, predatory lenders do the same thing. They come to your doorstep. They tend to go to low-income areas where the only asset is that house that was bought so many, many years ago. And they say, do I have a deal for you? I can make life easier for you. And they come in and they tell you that they can give you $400,000, however much $1,000 that they want to get you, and what they're getting is your house prematurely. Okay? So go there and find out if what they're telling you is even remotely true. Okay. Some of the unique features, nope. Some of the unique features of these loans is there is no prepayment penalty. Let's say you change your mind. You take out a loan for $362,000 plus, and you decide, you know what? This really isn't what I want to do. I want to own my house free and clear. I don't want to have, any debt against my home. I want to be able to give the homestead to my family. You can turn around and write the check back and give it back to them, and there are no prepayment penalties. If you keep it a while, yes, you're going to have to make some interest payments, and yes, you're going to have to repay what has been given to you. But there's no penalty, because sometimes in loans you'll hear about having to pay 10% up front or paying a fee for the privilege of having had your money and giving it back to the bank. Okay? Other things that are really important, okay? Reverse mortgages are looked at by the IRS as a loan, not income. So if you have Medi-Cal, it's a loan, not income. So you still get to continue having some of the services that you need if you need them. And the IRS isn't going to make you write a big check every year based on the money that you're receiving from your loan. You must be owner-occupied, and you can never, the big problem is you never truly know the interest rate until you're done. Because it's like, it's a fluctuating interest rate. There's no such thing as a fixed rate reverse mortgage. No such thing. Okay, so you really don't know how much you're paying till the end, and that's something to really consider. Reverse mortgages are expensive. They're expensive. They're expensive. That's all we need to say about it. Okay. There are 5 different types of ways to get your money from your reverse mortgage. There's that monthly advance that's fixed for a number of months or years, and that's only 3% of the reverse mortgage market. There are monthly advances for as long as you remain in the home, only 5%. The most prevalent is that line of credit. We talked, line of credit, that's money on demand, and you can write a check from your checkbook that's tied to your reverse mortgage to go and do the things that you want to do. Okay, that is the most prevalent kind. We got too many numbers going on here, but I think this one will help us understand that process of why it's important to the age issue. We're going to use all the same numbers. We're going to look at this as a $250,000 home, as long as the person remains in the home or the tenure of the home, line of credit, and then a $362,000 plus loan. If you're 65 years of age, you're going to get $781 a month approximately, and you're only going to get $125,000 plus dollars for the life of that loan. If you're 75, that number goes up to $1,064, and the total amount being able to be lent is $152,000. And if you're 85, you get $1,659. If you have one of the larger loans, you get even more money. But that shows you in pretty clear terms how the age makes a difference. Am I losing you, or are you with me? You're with me. We're going to skip that one. Costs. I keep talking about how expensive these loans are. Included in your loan will be the closing costs, will be the ongoing loan costs, and the ongoing loan costs are big. You have things like your PMI, if you had a HUD loan to begin with to buy your house, you had to do mortgage insurance. It's the same thing at the end, making sure you don't default on the loan. You have a mortgage insurance. There are monthly service fees that range between $30 and $35, and then there's that interest rate that we don't really know what it is till the end, which is troubling, but it's how it is. Those interest charges are monthly and or annually adjustable. Another thing to look at that small print. Is your monthly interest rate is your interest rate going to change every month? Is it going to change every year? And how much is it going to change? There are loans, particularly the HUD loans, that have interest rate caps, that it can't go above a certain interest rate, and that's important to know before you go into all this. Okay. Slide says it all. $16,000 over the lifetime of your loans, almost $17,000 in fees. In fees. Now you know why so many people now want to get into the reverse mortgage business. It's a money maker. It really is. They make a lot of money. You still get a considerable amount of money to live your life. And if you don't have enough money to do the things that make life worth living, this is certainly the way to go. But when you look at the amount of money that the bank, the lender, whoever is getting, there's a lot of opportunity for abuse to push you into a reverse mortgage, even if it may not be the thing that you need, that's best for you or right for you, okay? There's lots of money to be made in a reverse mortgage. We're going to skip that one too. I want to talk just a little bit about the new jumbo reverse mortgage. We talked about the maximums. If you live somewhere like Los Angeles County, and does anybody here live in Los Angeles County? Or Santa Clara County? How about San Francisco? Okay, well, the one who raised your hand, living in San Francisco, a jumbo reverse mortgage might work for you. They are not offering those kinds of mortgages in these counties, in the 5 counties that we live in, but I bet some of you have family who live in counties where you can have a jumbo reverse mortgage. So I wanted you to see that yes, it's available here in California. It gets you more money from the equity of your home, but that third bullet says it all. They cost a lot more, okay? So the bigger the loan, the more it costs, okay? They are expecting to offer 4 new jumbo loans this year, but we haven't seen them yet. Now, there are some questions you want to ask. When you're looking for a reverse mortgage or you have someone you love who is looking at a reverse mortgage, there are things to do. There's something called comparison shopping, and it's not just for the fabulous jacket you got down at Macy's. You want to look at what's available. You want to look at the lenders who are giving you options for reverse lending. Look at them all and figure out who's going to pay you the most and charge you the least, and what loan will give you the most left over. Those are the questions you want to be looking at. Who's going to give you the most and charge you the least? Now I keep harping on counseling because counseling is important, okay? The most important thing about counseling is it's objective and independent. If your bank says go to the office next to me for your counseling, say no thank you. I would like to have an independent, HUD qualified counselor, please. And I would like to do it outside of the lending institution, someone who has no direct ties to you. Because if you go to Joan in the office next door to Jim, who is writing your loan, how biased or unbiased do you think she might be? Do you think she's going to point out all the things that might be detrimental in the loan to you? Probably not so much. Does it mean she's not going to provide you counseling? Absolutely not. She's going to provide you counseling. But it may not be as objective as you need it to be. It is now required by law. You must have counseling before you sign on the dotted line. If you sign on the dotted line and you did not receive counseling, you may have recourse if your loan is predatory. Another benefit of counseling is there may be other alternatives that you weren't aware of that cost less and serve your needs. When you own a home, you have to have insurance. It's just part of the deal. You have to pay your property taxes. And if you've fallen behind on those things, even though they've been the same since 1976, there are loans and public programs that can help you cover those costs that don't cost $16,000 to get. And if that's all you need, isn't that a better option than taking out a reverse mortgage that you don't? Okay? There are programs that do weatherization. There are programs that can help with medications, if medications is your issue. There's all kinds of other programs that may be able to help you instead of a reverse mortgage. Now, I think you all know this by now. Reverse mortgages are not for everyone. It is not the right option for everyone. It can be a wonderfully beneficial tool. It can help you have a quality of life that you don't currently have. But it is not right for everyone. As we just talked about, there may be local programs that cost less. There are other ways to get money that cost less. There are other ways to get some of the funds that you need, to do the things that you need to have quality of life. So don't rush in. Okay. I see my guy standing up, so I have to hurry. And I don't have too much more to tell you, and that's good. But the Reverse Mortgage Education Project is a way to improve quality and availability and access to reverse mortgages. As I said at the very beginning, knowledge is power. You have the book. You get to take the book with you. Read it. If you're considering having a reverse mortgage, read the book before you start calling banks, financial institutions, and mortgage lenders. Have a list of questions to ask. Because unlike the majority of people who go looking for a reverse mortgage, you have a leg up. You know what to look for. You know what a good mortgage is going to look like. You also know that there are people out there who are going to try and take your money from you, and you will have the right questions to ask. There is the directory that's also in your book, so you don't have to write it down, at thehomeresources.org, and ask for a counselor referral. It is okay to go to counseling before you get a loan, before you've even originated a loan, to find out if it's the right thing for you. You've got your Homemade Money, the Consumer Guide to Reverse Mortgages. It's 46 pages long. There's a lot of information in there, okay? If you want more, you can stop me before I go. I've got a box I'm happy to share. Or if you want more and you want it sent to someone, go online at www.aarp.org and order one. It's there. The information and the resources are there. That reverse mortgage calculator is there. Do your homework before you go out to buy a product. That's a duplicate. There we go. And the last thing I want to say to you is do not rush into this. It is important to really look at all of your options before you decide on a reverse mortgage. And another reason not to rush into this is progress is being made every year, and the products are getting better and better. The interest rates are going down. The fees are going down. We're looking at having, universal fees across the country instead of regionally. So if you can wait, wait. But if it's right for you, if the time is now, the products are better now than they were 5 years ago, and a whole lot better than they were 15 years ago. Now, the only thing I want you to write down is, you might remember, my name's Julie Bates, not Patty Wallace. I know enough about reverse mortgages to make me dangerous. Actually, I know a little bit more than that. I'm qualified to come and talk to you about them, but I am not a HUD counselor. I am not part of the AARP Foundation Reverse Mortgage Education Project. If you want details about your personal situation, about what's happening with you, if you've taken out a reverse mortgage and your son has all the money, or you've taken out a reverse mortgage and the bank has all the money, or it's not what you expected, or you're not sure, call Patty. And this is her phone number. Write it down. Call toll free. She will actually talk to you, and she will guide you to someone right here in Calaveras County who can help you through this process of reverse mortgages. So thank you.